In other business news now, SASOL has reported a 52% drop in basic earnings per share for the 6 months ended in December. Headline earnings per share also fell by 31%. The energy and chemicals company has attributed the weak result to a difficult operating environment, with revenue decreasing by 10% due to lower oil prices and narrow refining margins. The average rand per barrel Brent crude oil price was down by 13%, while sales volumes fell by 5%. Lower output and weaker market demand further contributed to the reduction. Despite these obstacles, cash flow from operations improved by 20% thanks to adjustments in working capital. No dividends were declared for the period under review. SASOL CEO Simon Baloyi speaks to us now. Thank you so much for your time. Not too impressive, tough economic conditions indeed, but at the same time, what has been the response to this performance?
Thank you, Tumisang. Thank you very much for the invite. Thank you for a good introduction as well. Yes, we did face some tough operating environment, both externally and internally, that you well covered. Our teams, however, did respond to this. So we did that by making sure that we firstly prioritize, especially in the international chemical space, we prioritize value over volume. You've seen we've taken key decisions on mothballing underperforming assets. Throughout the business globally, we have also put strict focus on cost discipline. As you've seen, our cash fixed cost, if you compare two corresponding periods, H124 versus H125, we were actually 1% down, which is way below inflation. Our capex as well, through various levers of commercial and marketing excellence, we've made sure that our capex came in line with expectation. However, we're guiding that for H2 to be, at the lower end of our market guidance of 28 to 30 billion rands. So the team has indeed responded. On the volume front, you remember that drop in volume was caused by the challenges of coal quality that persisted. However, we've taken FID on a coal quality improvement solution, also known as destoning. And we expect this to be online during H1 26, and we'll start to see an improvement on that side as well.
Based on that, would you say that there's room for improvement in doing business, particularly in South Africa, given the political as well as economic dynamics? I'm asking here, what are the direct challenges facing SASOL?
Yeah, from a business, landscape, we're actually seeing an improvement. I think you've seen with the launch of the Business for SA, which is under the auspices of BUSA and Business Leadership South Africa. There is very good cooperation between the government and business. We all focus on making sure that our growth trajectory of 1%, we can get out of that, and we're all targeting 3%. And we're going to continue doing that. So it could be challenging regulatory environment, but the platform is open, the dialogue is going both ways, and I'm cautiously optimistic that we're all going to get it right to make sure that there is growth in the economy in general.
Lastly, talk us through the near to medium-term plans for turning the tide in terms of what plans are in place for SASOL to recover from these results.
Yeah, H1 is now behind us. Usually, the first half is characterized by major turnarounds, especially the secondary turnarounds, which does affect, other businesses that we shut down during that turnaround. That is now behind us. During H2, all our assets are available, both in Secunda and Sasolburg. Globally, in the international chemical business, we've set an ambitious target there to uplift that EBITDA by 100 to 200 million US dollars. So I'm looking forward to notwithstanding the macros, we're looking forward to a very positive performance in H2. We're going to continue to focus on cost discipline to make sure that our costs are in control. We're going to focus on commercial excellence to make sure that the work that we do, with our customers and our service providers, that there is win-win value for both ourselves and our customers. And yeah, we'll keep a close, tight focus on the destoning project to make sure we finish it on time and to start to derive value from that as soon as possible. So we're excited about the future. Our key focus is to make sure that we strengthen our balance sheet to give us optionality for growth and to be able to fund our transformation going forward.
All the best, and thank you for your time. SASOL CEO Simon Baloyi there talking us through the latest financial performance.